Module 9, Navigating Financial Success. Financial goal setting and monitoring. Financial goal setting and monitoring are essential elements of effective financial planning. Setting clear and achievable financial goals provides a roadmap for individuals and businesses to work towards financial success. However, goal setting is not a one-time activity. It requires regular monitoring and adjustments to adapt to changing circumstances. This module explores the significance of financial goal setting, strategies for effective goal setting, continuous monitoring of financial progress, and seizing opportunities for growth. The importance of financial goal setting. Financial goal setting is the foundation upon which successful financial planning is built. It involves identifying specific, measurable, achievable, relevant, and time-bound SMART objectives that align with individual or business aspirations. Without clear financial goals, individuals and businesses may lack direction, making it challenging to allocate resources effectively, stay focused, and measure progress. Goal setting provides motivation, purpose, and a sense of accomplishment as milestones are achieved. Strategies for effective financial goal setting. Effective financial goal setting involves a thoughtful and strategic approach. Consider the following strategies when setting financial goals. First, assess current financial situation. Understand your current financial position, including income, expenses, assets, and liabilities. This assessment provides a realistic starting point for setting achievable goals. Second, prioritize goals. Identify short-term, medium-term, and long-term financial goals. Prioritize these goals based on their importance and urgency. Third, be specific and measurable. Define goals with clarity and specificity. Quantify them in measurable terms, such as saving a specific amount each month or increasing annual revenue by a certain percentage. Fourth, set realistic timeframes. Goals should have achievable timeframes. Be practical about the time needed to accomplish each goal while considering other life or business obligations. Fifth, review and revise. Periodically review and revise financial goals based on changing circumstances or accomplishments. Celebrate achievements and adjust goals as necessary. Sixth, continuous monitoring of financial progress. Once financial goals are set, continuous monitoring is vital to track progress and ensure alignment with the overall financial plan. Regularly assess financial milestones, analyze income and expenses, and review investment performance. Tracking financial progress provides valuable insights into areas that may require adjustments or improvement. It allows individuals and businesses to make informed decisions and course corrections as needed. Long-term financial planning for major life events. Financial goal setting should encompass long-term planning for major life events. For individuals, this may include marriage, having children, funding, education, or planning for retirement. Businesses may set goals for expansion, diversification, or succession planning. Long-term planning involves anticipating financial needs, saving and investing accordingly, and staying proactive in adapting the financial plan to meet changing circumstances. Evaluating the impact of economic conditions. The economic landscape is dynamic, and external factors can impact financial goals. It is essential to be aware of economic conditions, market trends, and regulatory changes that could influence financial planning. Being vigilant about economic indicators allows individuals and businesses to adjust their strategies, seize opportunities for growth, and mitigate risks associated with economic fluctuations. From this module, we can conclude that financial goal setting and monitoring are the compass that guides individuals and businesses toward financial success. By setting clear and achievable goals, continuously monitoring progress, and adapting the financial plan as needed, individuals and businesses can confidently navigate the path to their financial aspirations. Effective financial goal setting provides purpose and motivation, ensuring that resources are allocated optimally to achieve desired outcomes. With a robust financial plan in place, individuals can enjoy greater financial security, and businesses can position themselves for sustainable growth and prosperity. Remember that financial goals may evolve over time, and it is essential to remain flexible and receptive to change. Regularly revisiting and revising financial goals in response to changing circumstances will help maintain financial resilience and ensure a successful journey towards financial success. Seek advice from financial professionals to craft a customized financial plan that aligns with your unique objectives and maximizes your chances of achieving long-term financial success.